In this video, I'm going to be going over exactly how much dividend income I made in the month of May from a $210,000 dividend portfolio. And to break this down, we're going to be jumping into my investment dashboard, my dividend calendar, my daily dividend calendar, and then like always, we're going to be projecting to see how long it will take me to achieve my long-term goal of one day living off dividend payments. And like always, if you'd like to be able to download this spreadsheet or any of my other spreadsheets, and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. I'd also like to say thank you to Seeking Alpha for sponsoring this video, but more on that later. Let's go ahead and dive in. Now, 2025 in general has been a pretty crazy year in the market. At its peak, my portfolio got to around $216,000 to $218,000, and then we saw the huge sell-off with the tariff sale, and my portfolio value dropped below $200,000. It got around $195K. So we saw around a $25,000 price swing in just a matter of a few months. But the beauty of dividend growth investing is when you're buying dividend growth stocks for the long term, is they continue to grow those dividend payments over time. So the amount I'm receiving in dividends every single month is continuing to grow despite what's going on in the market. And for reference, if we look at the past month of the market, it's actually recovered very well. So if you're someone who didn't panic sell during the tariff scare, then congrats to you. You probably have what it takes to be a long-term investor because there's going to be a lot more volatility over the next 10, 20, and 30 years. And it really is crazy how much we've seen the fear and greed index swing in the last few months. Just a couple months ago, we were in extreme fear territory. We were all talking about recession risks. And then as of right now, we're back in the greed territory. So I hope you are like me and continue to look for opportunities to buy quality stocks when they were on discount. But let's go ahead and zoom in and start breaking down my portfolio. Now, right now, my portfolio value is just a little bit above $210,000. And as of right now, about $54,000 of that comes from gains. We can see that gives me a total return of about 31.72%. Now, I've seen some confusion in the comments lately about the total returns. It's important to point out this is not a money-weighted return. This is a time-weighted return, and that makes a huge difference. Most of the time, the returns you're going to look at on your broker are going to be money weighted, not time weighted. And this is important because, for example, let's say I invested $5,000 and got a 100% gain from that $5,000. I'd have $10,000. But then if I invested $200,000, my portfolio value would be $210,000, but my total gain would only be showing $5,000. So my total return would actually be very low. So to clarify, if we're looking at this total gain on a money-weighted return basis, it would actually be quite a bit higher, and we'll be able to see that more when we actually look at my growth chart here in a minute. Now, if we come down here to my portfolio allocation, we can see right now I'm at 91% stocks and about 8.9% cash. My cash position increased just a little bit over the last month because in the last few weeks, I didn't invest quite as much as I typically aim to do. Now, total holdings is currently sitting at about 28. There's another position that I'm looking at very closely and considering adding to my portfolio in the next month or so. But I'm going to continue to do my due diligence, and if I make that move, I'll be sure to let all of you know. Now, if we look at my cost and market value charted out, basically, we're just looking at how much I've invested into each position and what the market value of that position is. So for example, if we look at Microsoft, I've invested over $9,000. The total value is over $15,400. If we look at my Visa position, I've invested about $9,500 and the total value around $15,400. And then obviously the huge outlier right here is SCHD, the dividend growth ETF. I've invested around $83,000 and the total value is around $93,000. But obviously some of these positions are a little bit harder to look at because I haven't invested quite as much, but we can see the actual growth of them over here. And there's a lot of positions for me that have done extremely well, but let's go ahead and look at the huge outlier. Broadcom, stock ticker AVGO, has been an absolute rocket ship for me. It's up almost 376%. And what's phenomenal about this stock is it grows its dividend at an extremely high rate. For example, if we look at Broadcom here on Seeking Alpha, yes, they have phenomenal returns over the past year, up around 73%, but I also want to show you just how rapidly they have been growing their dividend. Now, if we look at the dividend yield over the past 5 years, it's going lower and lower. So if you bought in right now, your starting yield would actually be below 1%. But we have to remember, we're buying stocks that are growing their dividend payments over time. So we don't want to just look at the initial starting yield. We want to see what our dividend yield on cost over time could be. So if we scroll down, Look, if you bought Broadcom 5 years ago, what would your yield on cost be? It would be above 8%, meaning if you invested $100 into this stock 5 years ago, you'd be getting over an 8% yield on that initial investment, so around $8 a year. And if we zoom out even more and look at it in the last 10 years, your dividend yield on cost could be above 20%. That's absolutely phenomenal. This is why we buy dividend growth stocks. On top of this, there's plenty of other big winners such as JP Morgan up over 152%, Caterpillar, a small position, but I'm still up around 103%. Look at some of these other positions that have done fairly well. We have EPD, which is a big yielder, up around 61%, Coca-Cola around 59%, Altria 56%, Microsoft 74%. We can see Bank of America 67%, Domino's Pizza around 46%. We can see Lowe's has done fairly well, close to 30%, Visa around 63%, and we have Texas Instruments down here at about 26.6%, Cisco, one of the smallest positions in my portfolio, but I am up around 51%. Jefferies Financial, a position that was up over 150% at one point, has come back down to earth, but I'm still up around 67%. We have Apple at about 45.54%, still up a lot even after the recent sell-off, and then Waste Management, another big winner at 55 to 56%. Now, in the last year or so, there's been 3 new positions that I've added to my portfolio. We can see them here. Louis Vuitton, down about 21%. UNH has been all in the news over the last few months. As you probably know, I'm down around 23.8%. And then we have ASML, a position that I'm pretty bullish on over the next 10 years, but I think there's going to be a lot of volatility with this stock. I'll cover it more in a video coming soon, but we can see I'm currently up about 11.27% on this position. Management team over there has stated they intend to reward their shareholders with a growing dividend over the next few years. Now, of course, like everyone, I'm not perfect. There's definitely some losers in this portfolio. INTC down about 45%, so a big loser there, and Target down about 27%. Louis Vuitton and UNH both down a little over 20%, but I'm comfortable holding these stocks. Now, UNH is obviously in the midst of a lot of controversy, so I'm having to watch closely to see if the investment thesis changes. But legally speaking, if everything works out for the company, I think there could be potential there. Now, if we scroll up here, we can see my current allocation. Now, most of my portfolio is currently allocated to SCHD. Well, at least around 44% of it. It fits in well with my long-term goal of trying to one day live off dividends. Now, it's important to understand what type of investments you should be making if you're looking to live off dividends one day. Depends on what your goals are, and it depends on your risk tolerance and exactly where you are in your investment time horizon. For example, if I was really close to living off dividends, I'd be focusing more on high yield because dividend growth wouldn't have enough time to compound for the long term. But with SCHD, you kind of have a position that's in the middle. It has a lot of dividend growth, but a relatively high starting dividend yield. Right now, we can see that starting yield for the trailing 12 months is around 4%. And then if we look at the dividend growth rates historically speaking for this fund, it's above 11% whether you look at it on a 3, 5, or 10-year time period. So based off where I'm at in my investing journey, right now it's a pretty good fit for my portfolio. But other than that, the main priority is dividend growth. Again, Visa, one of the biggest positions in my portfolio. Microsoft, one of the biggest positions. These are low yielders, but continue to grow free cash flow at a high rate, enabling them to grow their dividends at a high rate as well. Other than that, the main focus is dividend growth stocks, and it's fairly well diversified for the most part. There's a few high yielders in here, such as Altria Group, but I was able to buy in at a great valuation, locking in a high starting dividend yield, and they also grow that dividend over time. And we can see, again, MO, I'm up over 56% on that position. Now, if we keep scrolling down, we can see my allocation by industry. Again, this isn't the best way to break out SCHD just by typing out ETF, but it simplifies things a little bit. We can see, other than that, tech is about 16.2% of my portfolio. We can see financial services about 12.4%. We have consumer cyclical at about 7.3%, healthcare 3.9%, consumer defensive 4.7%, and real estate's actually about 7.2% of my portfolio as well. Now, one of the things I will point out, like I said up here, Visa's around 7.3% of my portfolio, and they fall under the financial services category when we break it out by industry, but keep in mind, in reality, it's more of a tech stock. So that is something to keep in mind. Now, there's a couple of other things that we could point out on our investment dashboard spreadsheet, such as our future portfolio outlook, but we'll come back and take a look at that a little bit later in the video. What I want to do now is reveal exactly how much dividend income I made in the month of May. So let's go ahead and jump over to my investment dashboard and start breaking this out. In the month of May, we can see it was one of my lower months, which is to be expected, but I received about $180.52 in dividend income. Now, if you've never watched the channel before and you don't know a whole lot about dividend growth investing, you're probably very confused. You just saw a portfolio of $210,000 that only produced $180.52 in a single month in dividends. Why would it be so low? Well, that's a great question, and it's so important we understand this concept. Over the long term, dividend growth has the potential to pay out more than high-yielding stocks, but in the short term, obviously, high-yielding dividends pays out far more than dividend growth stocks. Let me show what I mean. I modeled this out. If we look at an example where we don't reinvest dividends, we can see high-yielding stocks will pay out more in dividends, at least in the beginning. But due to the compounding effect, the snowball effect, dividend growth stocks over time will actually start paying out more in dividends. This is exactly like we saw with the example of AVGO Broadcom earlier. Now, you might be thinking, yes, that's true, but this is an example where we don't reinvest dividends. What happens if we do reinvest dividends? Well, the same is actually still true. It just takes a little bit longer for dividend growth to actually surpass high-yielding stocks. So when we see that I only made $180 in the month of May, we have to remember it's because I'm focusing on dividend growth. Like I showed you earlier, I have lower yielding stocks in the portfolio like Microsoft and Visa that will grow free cash flow at a high rate in the future, enabling them to continue to grow dividends at a high rate, meaning one day they could even be paying out more than a lot of high yield investments are right now. Along with this, we have to keep in mind, as you can see, there's a clear trend going on month over month. A good portion of my portfolio is allocated to SCHD, and that's by far my biggest dividend payment months. It's typically around $1,100 and it's continuing to grow, so next month will easily be over $1,000 in dividend payments. On top of this, if we look at my portfolio value charted out over time, we can see there's been a lot of fluctuation in the last few months. I mean, if we look at November of 2024, it was all the way up to $216,000, fluctuated quite a bit in the last few months. Last month, it was around $202,000, but now we're sitting at about $210,000 as we just saw. Now, if we really break down where my dividends are at right now, we can see my expected yearly dividend income is around $6,600 every single year. And on a monthly basis, if we average this out, it comes out close to $550 every single month in dividends. Now, yes, I am currently reinvesting these dividends to continue to speed up the snowball effect, but it's pretty comforting to know that at any point in time, I could stop reinvesting dividends. If I needed some extra cash flow at any point in my life, I would have $550 coming in every single month on average. Another way to think about this is if my cost of living is around $4,000 every single month, and my expected yearly dividend income is around $6,600, that's basically 1 month I've bought myself of freedom every single year. In reality, more like 1.5 months. So the goal is to get my expected yearly dividend income above my annual cost of living and to keep it there. Now on top of this, we can see my all-time dividend income is above $13,234, and I have a yield on cost. Not yield, but a yield on cost of 3.86%. Now, if we go ahead and zoom in and look at where these dividends are coming from, a lot is coming from SCHD and a good portion coming from real estate as well at about 12.6%. Now, it's important we break out where our dividend income is coming from by industry because it gives us a lot more insight than simply looking at the portfolio diversification. What do I mean by this? Well, if we jump back over to the investment dashboard, let's scroll back down to our allocation by industry. We can see real estate is only about 7.2% of my portfolio, but it makes up 12.6% of my dividend income. So it can be deceiving. Even if a certain position or sector doesn't make up a huge portion of your portfolio, if it makes up the majority of your dividend income, that could be a major risk. So if you're tracking your portfolio, which you definitely should be, you should be looking at metrics like this as well. Now, if we keep scrolling down, we can see my dividend yield on cost. Now, again, this isn't the current dividend yield for these positions, it's the yield on cost. So how much am I currently getting paid based on my original investment? And for stocks like Altria, they were high yielders, but we can see I have a yield on cost of about 9.18%. But if we jump over to my dividend breakdown sheet and look at Altria, thanks to ticker data, the data will load in, but we can see its starting dividend yield right now is just 6.71%. Now, I say just 6.71, that's still a high yield, but this goes to show you the power of buying stocks at a good valuation, and especially when they grow their dividend over time, you can really see your dividend yield on cost grow at a high rate over time. Another example of this would again be Broadcom, like we already talked about. The starting dividend yield right now is below 1%, but my yield on cost is around 4.3%. And it's interesting how this works. You can see the newer positions in my portfolio all currently have lower yield on cost, but that's because these numbers are going to continue to increase over time as I hold them while they grow their dividend payments. Now, finally, on this dividend dashboard, one of my favorite things to look at is my projected annual dividend income. Now, typically when you look at the value of your portfolio or even the value of any given stock over time, you're going to see a lot of fluctuation. It's going to go up, it's going to go down. And I mean, that's exactly what we've seen over the last few months. But when we look at projected annual dividend income, you'll notice something dramatically different. Basically, every single month, this number is growing. It continues to grow due to 3 reasons. I contribute more capital to my portfolio, I reinvest the dividends, and my stocks grow those dividend payments over time. Those are the 3 factors of the dividend snowball effect. So there's not going to be a lot of fluctuation. In reality, when this is done correctly, when you buy high quality stocks, your projected annual dividend income is going to continue to grow every single month. So even when we have months like we have recently, where the market might drop dramatically, my projected annual dividend income continues to grow every single month. And this can be a huge advantage when it comes time to retire if you're planning on living off dividends. Because think about it, maybe you saved up and are planning to retire on a $1 million portfolio, but a couple of months before you retire, we see a dramatic drop in the market. Maybe we have a year like 2022 where the market drops 20%. All of a sudden, you're not able to retire anymore because your portfolio pretty much just dropped by 20%. But if you're focused on utilizing the dividend payments in your portfolio to live off dividends, it doesn't matter that the market dropped by 20%. You can still collect those dividend payments if you're buying high quality stocks. So dividend growth investing can completely eliminate what is known as sequence risk. You're no longer reliant on what's going on in the market. You just continue to collect those dividends and go about your life. It's honestly the best sleep well at night strategy there is. Then finally over here, we can see my dividend income by each individual position. Basically, Altria, Realty, Vici Properties, and SCHD obviously are currently the biggest dividend payers, but those dividend growth stocks will continue to catch up over time as they grow their dividends at a high rate. Now, the next thing I want to do is jump over to my dividend calendar, but first I do want to say thank you to Seeking Alpha for sponsoring this video. Now, Seeking Alpha is a platform you've already seen me use in this video, and I've been using it for very many years now, but it provides some phenomenal resources no matter what type of investor you are, but especially if you're a dividend investor. We can see right here, there's a dividend tab, and it has 5 different metrics. We have dividend yield, we have dividend growth, we have dividend safety, dividend history, and even dividend estimate tab here. So we can better assess how healthy are those dividends, how have they been growing them, and what's the current yield look like. And for example, we were able to see the dividend yield on cost charted out earlier in this video for Broadcom. Now there's obviously plenty of other features such as looking at the financial statements or even looking at earnings reports, and we can even see some growth projections and how they've grown in the past as well. But along with this, we can see many analysts will submit their analysis onto Seeking Alpha, and if you're lucky, every now and then you might even find an analysis from yours truly. Seeking Alpha is also where I have a lot of my stock watch lists, so they make it incredibly easy to see how different stocks you're interested in are trading over time. So if you haven't used Seeking Alpha before, they are currently running a sale, but you can also use the link in the description to get a 7-day free trial to see if it's for you. Now next in my portfolio, I want to show you my dividend calendar, and it looks a little chaotic, but it's actually pretty straightforward. It's simply showing me how much I'm making each month in dividends. So it's showing the dividend growth over time, it's telling me how much each position has paid me. But what's most important about this dividend calendar is it helps me better visualize what's actually going on with the snowball effect. So the example I always like to give is Realty Income because they pay dividends on a monthly basis. If we zoom in here, we can see Realty Income has paid me around $761 over the years, but look in January of 2022 when I started tracking this. They were paying me $5.83. Because I reinvest dividends, because they grow their dividend payments, and I occasionally add capital when the opportunity is right, we can see that dividend payment is growing every single month. Now, starting off, the dividend growth was obviously pretty slow because I'm not reinvesting a lot of capital. But as we move forward through the years, we can see by July of 23, now I'm making $21.50. Keep moving forward, March of 24, around $26. And if we look at this most recent month, I had my first month where it paid me about $29. So we went from about $5 a month a few years ago to now about $29. So in just a few years, we're starting to see the snowball effect take place. Now, if we look at all the positions that pay me dividends this month, we can see EPD, an oil stock, pay me about $20.86. Realty Income, like I just stated, $29. Starbucks around $18. Lowe's around $28. They also just announced another dividend increase. Texas Instruments, $45.83. Caterpillar, $5.90. Jefferies Financial, $23.75, Apple, $2.64, and then ASML at $5.33. Now, if we keep moving forward, we can actually see my daily dividend calendar. And basically all we're doing here is we're visualizing what days we're being paid dividends and how much we got paid out. And we can see so far in 2025, I've been paid over $2,000 in dividend payments. So 5 months through the year, over $2,000 in dividend payments. I think we're off to a pretty good start. And again, next month is set to be a huge dividend month. With SCHD paying out, it'll probably be over $1,000 in a single month. But it's pretty encouraging when you actually track this over time and you stay consistent. You can see in 2022, I received about $1,289 in dividend payments. And if we look at where I am in 2025, just a few years later, just through the first 5 months of the year, I've already way surpassed where I was in 2022. Now, it can be difficult to stay motivated with investing sometime because it's truly a long-term game, but if you actually track your progress and you can visualize the change, 2022 dividends, 1,200, 2023, 3,400, 2024, 5,900, 2025, we're on track to obviously surpass 2024. When you track this over time, it becomes highly motivating. We can see my highest day of dividends in 2024 was $927, and this year so far, I've had an $883 day. And that was when SCHD paid out their Q1 dividend on March 31st. But if we look here in May, we can see we had a couple dividend payments here on the 6th and 7th, a decent dividend day on the 13th, another decent day on the 15th. The 20th was about $26, and then on the 29th and 30th, 2 decent dividend days as well. So no doubt this was a lower dividend month overall, but I'm excited to see where we end up next month. So all in all, I'm still pretty happy with my progress. I'm satisfied with the way things are going, but we still have to ask ourselves the question, how far away am I from achieving my long-term goal of being able to one day live off dividends? And I've built out a model to calculate exactly how far away I am from being able to do this. Now, if you've never seen the channel before, here's the projections we're making. Right now, I have a starting portfolio size of $210,000. We're assuming a price growth rate of 7%, which is a little bit below the historic average, and a dividend growth rate of 7% as well. So I'm not trying to be overly optimistic with my projections. We're doing a starting dividend yield of 3.5%, and the goal, which I failed to do quite a few times honestly in the last few months, is monthly contributions of $2,500. Based off that information, we're projecting out how my portfolio will perform over time over the next 30 years. Now, with that information, we still don't know how long it would take for me to live off dividends because it depends on what my monthly cost of living looks like. And obviously, this will fluctuate a little bit over time. But if we just assume a monthly cost of living of $4,000 right now, what we also have to remember is inflation compounds over time just like any other investment. So we can see year after year, my monthly cost of living, even if it doesn't actually change, is going higher and higher due to inflation. And at the end of a 30-year period, it could be as high as $7,245. This is what a lot of people miss. So when we're investing in these stocks, we have to get our monthly dividends above this black line, but also get it to stay above this line. And typically you can do that as long as the stocks you're holding are growing their dividend payments over time. So let's go ahead and jump over to the analysis. If we look at this charted out over here, this black line is my cost of living and this red line is my monthly dividend payments. Right here is the point at which I could start living off dividend payments forever, even if I stopped reinvesting dividends, because my dividend growth rate will be higher than the rate of inflation. That's the absolute key to sustainably living off dividends. Well, we can actually calculate exactly how far we are away. So let's look at this modeled out. If we start scrolling down, we can see around 5 years from now, we're still not able to live off dividends, but we are making about $1,788 every single month in dividends. By then, our monthly cost of living would be about $4,482. If we keep scrolling down, we can see year 10. We're still not there, but we're starting to close the gap because the snowball effect is really starting to take place. If we keep scrolling down, what we can see is right here, the start of year 14. This is the point at which we would be able to live off dividends forever because monthly dividends is above my monthly cost of living and the dividend growth rate is above the rate of inflation. And at this point, we could see my account value would be sitting at about $1.827 million, but the actual amount I invested was only about $632,000. Now, obviously, those are big numbers, but you can certainly live off dividends investing a lot less than this if you give the compounding effect time to actually take place. For example, if we really want to visualize the compounding effect and jump back over to my investment dashboard, look at my future portfolio outlook. 10 years from now, I should be making about $38,000, $39,000 in dividend income annually, but if we look 20 years, it's about $126,000. So it more than 3x's in a 10-year time period. And then look in 30 years. $372,000. The bigger the snowball gets, the faster it continues to roll. Now, if we don't reinvest dividends, we can still see the results are pretty decent, but quite a bit lower. It really slows down the compounding effect. 10 years from now, it'd be about $29,000 in dividends. 20 years, around $73,000, which is obviously still significant. And 30 years from now, about $158,000. So key takeaway, if you're not utilizing your dividends, obviously you should be reinvesting them. But there you go, that's exactly how much dividend income I made in the month of May from a $210,000 portfolio. Again, like always, if you'd like to be able to download this spreadsheet so you can use it and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.